Hello and welcome everybody to this brief XTB market update video. My name is Waleed Kudmani, Chief Market Analyst for XTB. And in this brief video, we're going to be covering the Fed decision that took place yesterday that markets received, the rate increase. We're going to be taking a look at the charts and what happened to the markets, how they started today's session, and a bit of a reaction and what's happening in the markets, what to keep an eye on as well. So this is going to be covering yesterday's decision, but we're also going to be focusing a bit on what happened today with a few other central banks. So let's start with a disclaimer as always, and then we'll move on to a bit of a recap of the news from yesterday and today. So let's take a look at the news as it came out yesterday with the Fed delivering a 75 basis point rate hike. This was quite expected. Some analysts were expecting at least or even a 100 point increase, but that did not happen. So the immediate reaction was a bit of a boost in the dollar and a pullback in stocks. We're going to be taking a look at the charts in a second, but here we have some of the projections from the Fed also, as it was one of those meetings where they also update their economic projections for the quarter. So as the news reads here, you can find this on the news section. The FOMC announced its latest monetary policy decision at 7 p.m. yesterday, and it was in line with market expectations. Rates were increased by 75 basis points to the 3 to 3.25% range. Attention now shifts to the press conference, which I will cover right now. Some of the key takeaways include the Fed wants to bring inflation back to target. This has been a top priority for the Fed and several other central banks, but the Fed has been one of the more active ones. The economy weakened, but deterioration was from record levels following reopening after pandemic. The longer inflation lasts, the higher chance that it will become entrenched. So this is completely opposite to the transitory inflation narrative that we saw quite some time ago. However, some positives include the labor market, which remains quite strong, and projections point to pick up in unemployment rate. So we could be seeing a slight shift on that end. On the Q&A section that followed, Powell's stance has not changed since Jackson Hole in August. There is modest evidence of labor market cooling off. The Fed wants to see clear evidence of inflation moving back to 2% before cutting rates. And today's moves put rates at very lowest level of restrictive range. So let's take a look at the charts now. What's been happening? Start with the US dollar index. So this is on the 4-hour chart. Let's go on the hourly chart just to take a look at immediately following the decision. You can see here, this is around the time of yesterday's decision, and today we saw a pullback as several other central banks began to announce their own rate increases. So we saw several European central banks. We still await the the Bank of England. So that is also expected to increase rates. And let's take a look at where we are on the US dollar index levels. We are at the highest level in quite some time, as you can see, going as far back. If we go on the daily chart, we would have to go back basically to the weekly chart, all the way back to 2000 almost, to find the high that we are at the moment almost. However, things remain quite volatile in the markets, as you can see, with the US dollar index moving up about 1% and then back down about 1%. Things remain very interesting in the coming days as well as we receive more and more news from several economies. Let's take a look at also the US 500, which, as I mentioned at the beginning, as the dollar went up, the US 500, you can see a huge drop about 3.5% before rebounding slightly today at the beginning of today's session in the before the open. At the moment, trading around 3,800 points, so 3,800 level. You can see lowest level since about July, mid of July, and after reaching a low of about 3,767 points. Now, while some of the economic data, especially last week, was quite troubling, as you can see this drop that we saw, we also had a slight rebound that allowed the index to rebound from this area. Furthermore, we have the US 100 tech index, so the NASDAQ, similar situation to the S&P. So similar impact on this market, again, pulling back following the central bank decision despite it being expected, and rebounding from the area, very similar chart-wise. Now, at the moment, trading around the EMA, the 8 EMA, and just testing the purple line, which is the SMA 21, and below the 50 SMA on the hourly chart. Now, once again, quite an expected decision from the Fed, but still we saw a pullback in stocks in the US and other markets. Let's take a look also at some commodities with gold. Gold still remains under pressure as the US dollar continues to dominate other currencies. Let's quickly look at also how the forex situation is with the US dollar today, trading against quite mixed, with some pullback compared to these currencies on the right hand side versus trading strongly against the left hand side currencies. The situation remains very interesting, so worth keeping an eye on. Again, with gold trading around 1666, rebounding from support. As you can see, the chart looks a little bit similar to the stocks, but at the same time, the reaction in stocks was much more direct, as you can see. So, to recap, the Fed announced their decision as widely expected for a 75 basis point increase. That led to which was followed by a reaction, quite strong reaction, both from stocks, the US dollar, and some other commodities which remain under pressure. We will continue to keep you updated with the news section, so make sure to follow us on the news section. And it's quite a few interesting days in the markets, as many central banks, after the ECB last week, several this week, and today, we will be expecting a few more decisions. But definitely very interesting weeks in the markets as economic projections become quite troubling towards the end of the year. Central banks struggle and focus on containing inflation, and their way of doing it at the moment has been an increase in interest rates across the board, basically. The Bank of Japan continues to remain more dovish, but they also are trying to back up their currency, as I can show you here on, if I open the USD JPY chart, you can see USD pulling back heavily after the Bank of Japan, as I will show you here, decided to intervene to support its currency as they were troubled by the drop in the value of the yen. So hopefully this video was useful. It was a brief video just outlining what happened, what the immediate reaction is, and worth keeping an eye on. I'll show you also the calendar for today. Central banks remain in focus. We have several: Swiss National Bank, North Bank, Central Bank of the Republic of Turkey, Bank of England, and a few more data from the US, including the US jobless claims, which, as I mentioned earlier, the job market in the US remains quite strong, but some projections are changing towards the latter part of the year with potential cooling off of the market. So thank you very much for watching. My name is Waleed Kudmani, Chief Market Analyst for XTB. Good luck with your trading.